Welcome, travelers. Tax season is still upon us. And today I will explain the TFSA. Disclaimer, this is not financial advice. I'm not telling you what to do. Also, this is for Canadians. Sorry, Americans. Sorry, everyone else. I don't know your accounts. I don't know your specific accounts. I can only explain what I know. So, Canadians, TFSA, what is it? That's the one everyone knows. Tax-free savings account. Okay? Why? After the recession of 2008, the market collapsed and blah, blah, blah. Interest rates dropped. So Government of Canada said, you know what? There's no incentive for anyone to save their money anymore because the interest rates are low. So they created a tax-free savings account. In my opinion, very, very poorly named because it's not actually a savings account. It's just like the RRSP. It's an umbrella. It's a tax-free, in my opinion, should be called tax-free investment plan or something like that. I have heard, I don't know if this is fact, I've heard that there was a big lobby to call it the tax-free savings account because it was better for marketing purposes. Okay? So, I already attempted this video once and it got way too convoluted, so I'm going to try to keep it simple and then maybe I'll expand on things in another video. But here's the gist. The problem with this account, before I start, is there are so many things that can be easily misunderstood and misinterpreted. So I'll try to explain it as best I can, but I will have to probably make another video that really explains the detail of it. So that's what it is. It's another incentive for people to save their money, not specifically for retirement. How does it work? Not to get too complicated, the contribution limit has changed from year to year. So people think that you can only put X amount of dollars in 1 year, when in fact it is cumulative based on when you turned 18. And if you were 18 or older in the year 2009, which was when TFSA was created, then you can benefit from the entire contribution limit. As of today, if I'm not mistaken, the maximum contribution limit to a TFSA is $52,000. What does that mean, first of all? That means if you have $0 in a TFSA, you can write a check for $52,000, slap it in there, buy some investments, and get your money rolling tax-free. If you have X amount of dollars, if you have $10,000 already sitting in there, that means you take $52,000, the maximum, subtract $10,000, which is what you've already contributed, and now you have $42,000 of space left. It's like, literally, they say contribution room, think of a room, right? If a room has so much space and you start putting boxes in it, right? It's how much of ever is left. Now, this is a room that keeps expanding year after year. If the room keeps expanding year after year, does that mean you have less space? Just because you didn't put anything in the room in 1 year? No, that's not how it works. Again, I'm not going to get too complicated, but I'll leave it at that for now. So, how does it work? Unlike an RRSP, you put your money in this account, not specifically for retirement. It could be, but it's not specifically for retirement. Unlike an RRSP, you actually don't get a tax return. So you're getting paid your money from your job. The job takes the taxes away like usual. Then those after-tax dollars are being invested into the TFSA. Therefore, you do not get a tax refund. Oh, but why would I do that? Well, benefit to it. Gross tax-free. When you take your money out, you're not taxed. There's no fee, there's no penalty, there's no tax, nothing. The only thing would be is if you went over your contribution limit or something like that. But that's more of a penalty and a fine because you went over your contribution limit. It has nothing to do with being taxed. Okay? So, why would you do that versus an RRSP? Two reasons. Well, there's multiple reasons, but two that I can think of right now. It's more of a short term, you don't necessarily need it for retirement. So, since it's so much more accessible, it could be like I'm saving for a down payment on a house, okay? Or I'm saving for a vacation in so many years, or I'm saving for something in so many, 3 years or something, even for a very short term. So Unlike an RRSP where you get taxed when you take the money out and you have to plan it for retirement, this is any time. I can put in money now and take it out next week if I want. Are there implications to doing that? Well, you kind of sacrifice the contribution limit room in that year. A little complicated, so I'm not going to talk about it right now. Another video. But it acts as a savings account. However, you can put mutual funds, you can put bonds, you can put whatever. You can just put cash in there, which is most people have it as a savings account. Wasting its potential, really. Bonds, mutual funds, you can even do stocks. You can open up a brokerage account under a TFSA. Excuse me. Whatever you buy, sell, whatever, high, low. Those are not getting capital gains taxed. Again, not going to talk about that right now. The point is, your growth is tax-free. Big deal. People totally undermine how important tax-free growth is. So, why would you need it? Like I said, to sum it, the other reason why you would need it. If you're really good and you maxed out your RRSP room, your company pension offsets your RRSP room, and like you have no more space in your RRSP, and you still want more for retirement, you could do that too. Your TFSA is separate from your RRSP, but again, it's about you as a person. So that doesn't mean you go to one bank, open a TFSA, and then you go to another bank, and then you open another TFSA. You can do that, but the room is combined. So you don't get extra room. You don't get another $52,000 because you open your TFSA somewhere else. It's the same room, so you got to keep track of that. Good financial advisors will be on top of that. Not good ones probably don't even know half of the things that I'm saying. No offense to them. It's just how it is. So I'm going to leave it at that because there's a lot more stuff, but I don't want to convolute this video. This is the overview. I'll get more to the nitty-gritty in another video, but for now, please like, please comment, and subscribe. If you have any other finance questions, I'll be happy to make videos about them. Let me know in the comments. Let's keep growing together, and I'll see you guys next time. Take care.